Hi, Warriors. How's everyone doing today? Ingmar, how are you? Mike, Glenn, hi, Ryan came in. We're at full force. James Groom, AJ, Patrick. Yes, Blake is happy. He came in, is back. Saloom, hi, how are you? Mooning? Oh, yeah, full moon Tuesday, right? Saloom, George, everybody. Okay, so we're getting a bounce in currencies. 106 was very close to 78.6 back. Thought yesterday it was, you know, due for at least a bounce. We get through 650, maybe we can make a move towards 107. Would have to reclaim this breakdown for it to be anything other than a rally with one more decline. So I still think there's one more decline coming. And why don't I go to the team? And yes, Ryan, I've been trying to get him to buy the euro.
I'll buy it with your money.
Huh?
I'll
What do
buy
you
it with
think?
your money.
All right, well, okay, then you could buy like a micro lot. Uh, so let's see. What are you thinking? Just sideways, still, no reason to do anything,
Yeah.
either long or short the dollar here.
Yeah, this is one of those moments where it stopped going down. So that's
Okay,
that's one bit of price action you need to be aware of. But as you can see, it's not bouncing either.
yeah,
So we've come a bit of away from the 108s on the hawkish twist, the CPI, and now POW, and we
yeah.
couldn't make any more gains in the dollar. So that tells you we've got at least a temporary bottom or something more developing down there. So that's your 106 is a level. If we break that, we're on our way again. If we hold that, there's every chance we get a bounce back towards 107. And then what we
If we
do at
take out
107,
Yeah, okay. I was
yeah,
just curious if we took out this big round number, do you have any significant numbers underneath it? Because I maybe there's I'm fib
105, mate.
wise. What
105. That was my
105?
level last time. That's where I bought it last time for the run to 111, and
Okay.
that's my number again. If you go back onto a weekly or something, you'll see how big a level that is. It goes back miles.
Yeah.
That was my last lifestyle trade, if you remember.
105,
Yeah,
105, 16.
yeah,
Undercut it, and then once it got back above 105, it went.
yeah.
I
It
see.
goes back years and years and years. But yeah, that's my big number. I'll probably have a go again, depending on the reason we're down there. But yeah, for now, 106 is so it's the same in a lot of pairs. Cable held 124, so now we're playing the 124, 125 game we spoke about yesterday. Um, we keep revolving around this magnetic 124.50.
Okay.
On off, on off, on off. But yeah, so it's the move stopped. The dollar strength has stopped. Has it just paused, or is that
Yeah.
the end of it? The market done its pricing, repricing, whatever it wanted to do regarding
Yeah.
POW and the CPI data.
Okay. Yeah, because so far it's kind of a small down week. Yen giving up 7, which is nothing. You
Yeah,
know, I don't know. Confirming on the daily. See if it's confirming on the 4 hour.
still a
Kind
world of
of.
its own.
Yeah. Anything on Juan that you're paying attention to?
No, there's not a lot going on. The data's been a touch better earlier this week, but there's still a heavy dollar influence pushing this higher.
Okay.
More than one weakness at the moment, but they're keeping it steady. They step in when it gets too excessively weak, and as you can see, we've done nothing for the last month and longer. So yeah, it's not ready to bust a move just yet, and they're not ready to let it go anywhere just yet. But we'll know in
Okay.
good time when they do.
Okay. Well, we have Luke Roman at the bottom of the hour, And something in the stream, he brings up the yuan and how the Chinese are able to set the gold price. So that's going to be something I'm going to want to know how. So stick around for Luke. And then, since risk off has stopped for a little while, maybe we get Blake was all over US dollar MEX, and maybe we get some kind of pullback in here. Dollar, dollar weakens a little bit, and the yuan pulls back, peso pulls back because maybe we're going to have 2-3 day rally in S&Ps. There we are. Looks a lot like the euro too, So if we get a pullback in the dollar, we should get a rally back. Maybe, I don't know, back to resistance 140. We'll see. I don't know what earnings came out today. Nasdaq's actually half as strong, so I don't know what that's going to do. And Dow's really been the weakness, so I think there's a lot of damage done here. Maybe get a 2-3 day rally. Israel has not retaliated, and maybe they do something next week. Although it's a high holiday for the Jewish people next week. Passover happens around the full moon. The Hebrew calendar is a lunar calendar. So, I can't see them doing anything on a holiday like Passover. So, but they may, secular government. Maybe they think the Iranians think that they wouldn't do anything on a high holy day. They're attacked on high holy days, but they've never gone to war on one. So we'll see. Metals, bring K-Man in. Welcome back after your
Hey.
Ryan-like shortened vacation.
Ryan, like,
What are you trying to do? You trying to catch? You trying to catch up with that guy?
not really. Oh no, oh la la. I'm weeks
Yeah,
away from that, if not months.
you could take a year off. Let's see. So gold and silver, what are you thinking here, bro?
Well, gold, I was saying, I was showing it on the flow show too. 23, 20, 25 is where it held, and that was the level that I was looking at. It's held, but geopolitics, yes. China, perhaps trade wars, yes.
Steel.
But I I have a bit of trouble chasing it here because of I still think the dollar is should be doing all right. So yeah, so I've got a bit of a. I'm actually not doing anything in gold. Silver,
Okay.
I took some off the other day, and I'm patiently waiting. But if we continue to get like decent economic data coming out, like take away inflation, but decent other economic data coming out, it may be that we only correct into those mid 27s, and not getting a chance even to buy back at 25 and a half.
Yeah. I'm hearing
That's
six and a
how,
half. Six and a half, which, as the breakout was 26
yeah.
on the weekly chart, right? So if it's good, it shouldn't give people a chance to buy the breakout, maybe above the breakout,
Yeah.
26 and a half or so.
Yeah, anywhere between 26 and a half and 25 and a half should be ideal. That's where I'm looking at re-adding. But I'm not sure we're even gonna get it. Yeah, that one is those yields, those are I think they should just hang around where they are. We didn't get too much from Powell yesterday, but Powell was actually relatively interesting because he did acknowledge that it's going to be higher for longer. At the same time, during his presentation, he did put the bar relatively high for more hikes. So people looking for more hikes, I think that's a bit over the top. But of course, nothing prevents them for just sticking to their guns and letting yields or their rates where they are now, letting the market catch up, and that will in theory, still be good enough for the dollar in the currency market to do well, thanks to the good numbers and interest rate differentials.
Okay. So, I was looking for that 88, 89 level, and this is a great example of not just buying something or selling something because it gets to a line. Because guys, how many throwovers do these channels end up experiencing? So what you need is coming off a line like that is at least a blue candle. You notice there were 2 red candles off the line. That doesn't show a lot of buying power or flow. So what do you do here? You could wait for something to develop and try and set up a trade here, but classic technical analysis would
Uh,
wait for closes back over 89.
What about that gap that you have there back in November last year, down
Oh
around the
God,
86, 85 level?
yeah. Well, if we're going there, then the other scenario is in play, which I didn't think would be, but it's back on the table, and that's a 3 drive formation, which implies taking out the October lows. Okay, so um, that would be a big deal, right? That would be new highs in yields on the 30-year. I would try it down here. You'd probably
Yeah, I think so.
really have everyone bearish, but do you think it could trade? Where's this coming in?
Really there?
Like under
That's a big
80?
ask, no?
Huh?
Down there, that's a bit of an ask, no?
Yeah, that's what I'm saying. I right now I was a believer that this was real. Um, and there's, the corrective structure would be like, A,
Hmm.
B, C. So that's the way I was leaning, but I don't know. Can't rule this out yet until it gets back above. That's why I say, instead of trying to catch a falling knife, you just wait for it to get back inside of the channel, and then you have a false breakdown. But right now, um, looks like you're going to get a 3 driver here. Actually, here's the little shorter term. Yeah, 1, 2, one more low for 3. Anyway, a lot of people looking to buy the bonds. So, especially if we do have more of a correction in S&Ps. And, you know, I think any rally in here, should be sold in the S&Ps. So I'm just
Hey,
waiting.
hey, Dale, you're good morning. You're kind of
Yeah.
quiet. I don't know if your
Oh, yeah.
microphone's far away from your head or you're just kind of quiet this morning. Just wanted to see if you had to if you could make an adjustment.
How's that?
Got much better actually.
Okay, I turned up the volume a little bit. Anyway, I covered what I wanted to talk about. Apple almost broke down yesterday. It's sitting there on the verge.
There's a few things that are sitting on the verge. And good morning, guys. Good morning, Ryan, and good morning, K-Man. K-Man, welcome back. And obviously, good morning, Dale. But yeah, I mean, there's a couple things that look vulnerable here. So
Yeah.
yeah. So hey, let me can I
Yeah.
share something with you?
Yeah.
All right. We've been talking a lot about the dollar, and this is the dollar index, I think, is set up really perfectly. And right now, I think we're going to be set up here until probably until going into the weekend. And next week we got PCE, so maybe that's we have some GDP data coming out. Maybe that's it. But this is our Gartley pattern. And whoops, let me adjust this a little bit further to here, 88% retracement, 150% extension. So you got basically your Gartley pattern right there. And so right now the dollar looks pretty overbought, but doesn't mean that you should be shorted, because I don't know about you guys, but I keep thinking, if something happens, I don't want to be short the dollar. If something like for geopolitical reasons, if something flares up in the Iran, Israel, let's say we get a retaliation, the dollar is going to be, it's going to catch a bid pretty quickly, I think. So therefore, I'm just looking for pullbacks now, but it seems to me very logical here that we could see a pullback, which would allow the euro, for example, would probably rally back towards, the 107 level. And that's where I would be looking for failures, is, up around 107. And with the UK data, matter of fact, I should ask Ryan, the UK data, very reminiscent of the inflation data of what we got in the US, a tick higher in CPI, and producer prices a little tick lower. So what'd you make of the CPI data today?
Yeah, well, it actually came down versus last month, but it all beat expectations by a pip. So
that's what I meant. I'm sorry. Yes.
Yeah, it didn't come down as much as was expected. So it keeps the stickiness. PPI input prices year on year posted their 10th monthly loss of a negative number. So that's fairly good news. But what's not good news is output prices rose for the second month on the trot. So people are still passing on. They're getting cheaper materials, but they're charging a bit more still. So that keeps the domestic core inflation ticking over. So, it's the same picture everywhere. The US has seen inflation sticky for 9-10 months. Eurozone on its way. UK sticky. Other places sticky. South Africa this morning sticky. So it's in most countries it's coming down, just not coming down very fast. And the fear is going to be whether it continues to come down or does what it has done in the US, which is start going sideways a bit more.
I had a conversation with Jim Welsh last Friday, and Dale, you could appreciate this too, and I asked about producer prices, and I was talking to my buddy Joe, who's also in the ForexAnalytix chat room. I've known for 15 years or whatever. We were chatting about producer prices, and I'm like, I came from this school of thought that producer prices really fed more into CPI, and Jim kind of straightened me out as far as saying, it's our in the economy that we have right now, it's not that big of an input anymore, being more of a services economy. So it's a smaller input. So, but that's not necessarily the case for the UK. And maybe I mean, I know the UK is more of a services economy as well, but just something to think about. I thought it was a very interesting conversation. Forex Trader here in our chat room said, in all wars the dollar fell, the Fed will cut to support economy and finance the war. I don't disagree with that, but you know what happens when the poop hits the fan? What happens when the poop hits the fan, Ryan, initially? People, the market
goes all over the house, man. What?
Yeah, well, the market, the first thing the market does is they shoot first, ask questions later. So the first reaction, the knee-jerk reaction, is you have the dollar a lot stronger, gold a lot stronger, and then once everybody takes a step back and say, okay, well, what's this really look like? Yeah, then the dollar may weaken. But what that could mean for you is in a situation like that is you get the dollar, which you are sitting there looking at, and you're like, oh, well, we're going to war, so I'm going to get long the dollar. And then what happens is let's say a war erupts, and it's not a pretty war, let's say, things kind of progress. The dollar is going to spike up towards 109 first, and then after a while it might come back down again. But if you're sitting there short the dollar, or let's say long the euro, and the euro trades down to parity really fast, you are effed in the rear. So just keep that in mind. Anyway, it's the gut reaction and the instant reaction, the knee-jerk reaction, is the one that's going to wreck you. And that's why why we trade the markets, and you have to be extra careful in situations.
I took my dollar longs off yesterday.
Dale, I can't say I'm not long the dollar anymore, but after being long the dollar most of 2024, I've taken most of it off. So I'm with you. And I'm really hoping that the euro can see 107 again so I can get on the short side. That's the way I'm viewing it. Hey,
Yeah.
K-Man, what are you looking for? I know you've been on vacation the last few days. I'm joking. I'm just running off Dale's joke here. No, but seriously, I know you've been away for the last couple of days. What's your focus right now? What are you thinking?
Well, to me, the dollar is how you would call as technicians working off overbought situation more than
Yeah.
that is how I look at it.
Yep.
We may need some fresh flows or fresh indicators, but still, if I look at the combination of all data that we had since the start of April, there's nothing that tells me that I need to sell dollars. Now, choose your dollar wisely is always my case, my word. So yeah, I mean, this not all dollars are equal, right? I mean, if you want to play emerging markets, you got to be a bit careful. If you play, let's say, for instance, Aussie or Kiwi, we are on decent levels, right? We are on the 106, we are on the 64, 63.90, close by on the Aussie. So it's a bit logical that unless we get fresh flows in this market, that the market is going to take a pause, right? We have come down quite a bit. Also, I still think that Q2, the start of Q2 where we are in, is more messy than the straightforward Q1. So it looks as if that is starting to materialize. But again, if you just look at what the data are doing, the differentials playing in favor of the dollar for the better part of the of its partners, let's put it that way, or G7 partners, you should still somewhere look at buying dollars again on dips. I'd say once we worked off this overbought situation.
Yeah, US exceptionalism is it's a thing. I mean, look, the US economy is performing much better than everybody else. And that is a fact, and that's plain and simple. You could sit here and go, well, but this, maybe the jobs data is skewed because it's not great jobs, and you can make all the arguments you want, but the data speaks for itself, and it's really it's played out, and continues to play out in the bond markets, right, K-Man? I mean, that's just the bottom line.
Yeah. Yeah, so I'm personally happy to just keep a few running. Swiss is still a low yielder, and that's all right. My dollar yen is fully hedged because I just don't know. But the thing is, as I said yesterday as well on the Flow Show, and perhaps here already the day before yesterday, the fact that Ueda and Suzuki are in Washington for the IMF and the G20 perhaps reduces the risk of interventions a bit. There's a lot going on. I see on media about 156 in the dollar yen because that's 10 big figures from where in a month's time or so. But I don't know if Canada really is going to put his threat to execution. In the meantime, this thing is still moving higher. But I think we need to concentrate on next week for the yen. Once all those guys are back home. And also, let's not forget that we have Bank of Japan coming up in a little over a week.
Yeah. Well, let me just go ahead and say this. Please go home, like now. I'd be happy with that. Thanks, K-Man. Real quick, I want to show you guys one of the other things. Well, actually, two other things that I think you should be focused on right now. Crude oil, and then I'll just give you some of the analysis from ForexAnalytix. This is, in my opinion, a pretty good risk barometer for the market. Crude is sitting here on support, 84.50, 80, 350, somewhere around there. Watch crude, because if crude breaks lower, that to me is telling us, that the market is less concerned about, Israel and an imminent, it's still 5 o'clock in the morning here, imminent attack of Iran. And I think if crude oil prices really start to, taper off and we see $83 or whatever, I think that's just going to lift equities. But one of the other risks that I see currently, and that you can read all that here on ForexAnalytix. One of the other risks that I see right now is Bitcoin and crypto. Crypto is really underperforming at this moment. And take a look at Bitcoin. We're getting real close to some pretty key support. Now, if you look at like my analysis and the team's analysis on,
Looks like oil
here. Yeah, it does, but this is more longer term. And a lot of people would say, well, this is still a very bullish trend. I agree. It's been a really strong trend. The risk I see here is more longer term, that we had this false breakout above 70,000. And so I'm not bullish here. I'm actually more neutral, but we start trading back below 59,000, and I think there's going to be a little bit deeper correction. This is a good risk barometer, and it proved itself over the weekend when everything was closed, and we had the attack of Israel from Iran. Bitcoin and Ethereum, they crapped the bed. And so watch Bitcoin, because it is truly a risk barometer. It's, there's been a lot of money made in crypto, whether you're institutional wise, a lot of money's been made here. A lot of people have piled into crypto. So, when you start looking around and you're like, okay, I need to get out of things. I need to take some profits off the table. I think one of the first things that are going to go are some of these crypto names, and you probably see some ETFs get liquidated, and so I think you got to keep an eye on the crypto market. If they start to break down, that's probably a one of those signs that you need to start being very, very careful with risk in general, with what's happening in the markets. And one last view, I just want to take you into equities really quick. The S&P is not so far away from its 24% retracement. We already broke down the channel, so everybody, well, if you're in the ForexAnalytix community, you're listening every day to our shows that we have just for the ForexAnalytix community. We've turned bearish, over the last week. In the markets, we got a good support break. We're back inside of the previous channel. Dale, this is your classic throwover that you like to point out. And we're approaching the 24% retracement, but it's not just the S&P. The NASDAQ's starting to get below support. The Dow's obviously broken down. The Russell 2000, as we've said, all of 2024, it's going to underperform, and it's really underperforming now that the market's starting to show some signs of weakness. So, and then you look at, I got to point this out too. Watch the DAX here. We're flirting with a 38% retracement of the last leg higher. We get below here. You're talking about pushing back below the 50 DMA, below the 38% retracement. We're going to negate any type of bullish setup that we had. So watch the German DAX. This has been one of those.
Watch the Nifty too. Like Rohit was bearish to Nifty, and
yeah, let me pull it up.
I talked to another guy who says it looks like it topped. That was 5 up there.
Yeah, okay. And this is your 3 drive to a top here, Dale, if I'm counting correctly.
Well, yeah.
Well, we could do this 1, 2, 3, right there.
Yeah. I mean, the divergence was glaring. That's a key point.
Yeah, it sure was. Yeah, I mean,
so
there are a lot of markets that look, they don't look so great, and which makes sense. I mean, we've had a freaking hell of a rally.
You want to see something that looked great, Blake, team? Do you?
Yeah. What do you got?
It's not Steve Naked, is it?
Oh no, you're looking great, Dale. Look at you.
Look
You're
at me
looking
for
like a new man.
Like an old man, for an old
no,
man,
like a new
huh?
man. You're like a new man.
You look like
Born
the Saint.
again.
Is that a roll neck?
Huh?
You look like the Saint. Do you remember that old program?
Oh,
Saint?
yeah. Thanks, man. I'm not really even close to one, but anyway,
What's the
that
badge?
should be.
The badge?
Yeah. So
I'm promoting Luke over here.
Okay, thanks.
So if you haven't brought him over, I'm going to bring him over. Hey guys, I want to thank you all for being here. K-Man, really excited to have you back. And I know it's probably good for you to be back, and it's nice to have you back. And Ryan, it's always good to have you here every day. Thank you for being here. And Dale, Thanks for guiding us every day.
Cheers,
All
guys.
right. You're very welcome. Yeah. Well, I don't have any headaches anymore, guys.
So,
It was like
Oh, great.
90
Magic.
days in a row.
and it all
Good
it all
stuff.
has to do with allergies. That's it. That's it, Dale. Just
Well, it was
kidding.
a sinus infection, and I was being treated for migraines. And migraine drugs are really not that good for you. That's why they only give you 9 a month. So if you have a migraine attack every day, you just have to deal with it.
Yeah.
Because, anyway, the technology.
Well,
Anyway,
welcome,
let's
Luke,
talk.
and you guys have a great
Yeah.
interview.
Hey, Luke, great to see you, my friend.
You too, Dale. How are you doing today?
I'm doing okay. Great not to be in pain. Really, it dominates your life if you're like that. You have pain and makes trading look like, who cares? I just want this headache to go away. So,
well, I'm happy to hear that.
yeah. So here I am. I'm back. It's like trading, right? You have to work hard and live through adversity to rise to a new level.
That's right.
And we learn the most when we make mistakes. If we embrace our failures, right?
That's right.
That's when we learn. And I know that everyone's going to learn from you today, because I went over your stream and you're covering some really interesting topics. And when we start, I mean, gold has been stealing the show since Bitcoin's moving sideways right now and gold made new all-time highs. You talk about that China is able to set the gold price. Can you explain that to me and our community, how they're able to do that?
Yeah, it's in essence through the law of one price. So the law of one price says you can't have two different commodities priced in two different currencies, or two different commodities priced. Let me start again. One different currency or one different price of something in two different currencies priced differently, X the FX differential. And so historically, when we're seeing Chinese buy a lot of gold, that's not necessarily new. That's the Chinese people they own a lot of gold, they buy a lot of gold. They're buying a lot of gold, relatively speaking, right now, but that's never affected the price like this before. The difference, and really it's I wrote a report in September last year highlighting that the title of the report was China just used gold to defend the yuan. And it was kind of ridiculed by some people at the time. They're not laughing anymore. The way they can do this is historically when the Chinese people buy a lot of gold, price of gold would go up in yuan terms, right? Supply demand. And the Americans control the price of gold historically, the Westerners, the UK and the US. Number of different ways that happens. That's a separate discussion. If the price of gold in dollars is not moving and the price of gold in yuan is moving higher, what that's telling you is through the gold pivot, the yuan is falling against the dollar. And that starts to become a problem in short order when oil and commodities are only bought in dollars, because China has to get dollars to buy oil and commodities to fuel their economy. And so buying gold paradoxically leads to a weakening in the yuan, which leads to a need to run down their dollar FX reserves to buy oil and commodities. Eventually, they run out of FX reserves. They have a currency crisis, the currency collapse, they have an economic crisis, kind of basically what we saw in Southeast Asia in 1997, 1998.
Right, Thai baht.
Everything changes if you can buy oil and commodities in yuan if you're China. This is the part that I think most people still aren't even thinking about yet, and it's why I think gold is ultimately going way higher, because most people aren't even aware of this yet, and the implications of gold, of oil and commodities being bought in yuan by China. And it doesn't have to be a lot of them. It doesn't have to be the majority of them. in commodities, the marginal ton price is the whole, right? That's why oil went to
Exactly.
negative 37 a barrel in April of 2020. It wasn't
Right.
because all 105 million barrels produced that day
Couldn't
were
find a
worth
home.
negative $37. You had a tiny little part
Yeah.
that couldn't find a home for storage. And so the entirety went to negative 37 a barrel. Okay, so now that China can buy, now the marginal ton of oil and commodities around the world is undoubtedly priced in yuan. In fact, the head of JP Morgan's trading desk was quoted in the Wall Street Journal in December saying it was around 20% of the world's barrels last year were done in yuan.
Wow.
Gold rising in yuan says something very, very different. It says gold buys more oil and commodities in China than it does in dollars in London and New York. And so capital flows where it's treated best. Gold is just capital. So what happens? Gold starts leaving London, it starts leaving New York, and it starts heading toward China, as does oil and commodities. And so it is really China using the law of one price in an elegant way. The price in question is the gold to oil ratio.
Yeah,
How
and you
many
say
barrels
that
of oil?
gold is an oil currency now.
Gold's an oil currency, right? So if gold buys you 25 barrels of oil in China and 20 barrels of oil in New York or in London, guess where the gold's going to go? It's going to go to China. And then at some point, China starts to set the price. And we've reached that point, in my view.
Okay.
Empirically, we've reached that view. We can see it.
And also, you bring up J.P. Morgan. They made a visit to the Shanghai exchange, which was Jim Sinclair's idea to emancipate gold from the paper market.
Interesting.
Yeah,
And someone pointed out to me that Deutsche Bank had been there 2 weeks before JP Morgan, the head of their metals desk, HSBC the week before JP Morgan. There is there's a fact pattern emerging where and oh, by the way, this is all happening as Janet Yellen is effectively telling you she's going to devalue the dollar. Like if she was any clearer, she would be at a podium saying, hey, Wall Street, I'm going to devalue the dollar. That's what I'm talking to the Chinese about. So I think that's a really positive overlay for gold as well.
Yeah. And China, that would assist China too, because they did spend a lot on reserves to support the yuan last year, didn't they?
They did. And I don't, when you hear Yellen say we need China to not dump product, we need China to not flood the market with cheap goods. Right? So many people are still saying, well, China needs to devalue the yuan. China's running a 30-year manufacturing surplus, and they're running a near record current account surplus with the world. Why do they need it? Do they need the surplus higher? They're fine.
So how is Yellen communicating this, Luke? Because I just had an attendee say that their standard statement from Treasury has always been during the biggest bear markets in the dollar, we have a strong dollar policy.
I would go 2 weeks ago, there was a Wall Street Journal article. Janet Yellen missed the first China shock. Can she stop the second? In it, she said that the economic orthodoxy of the United States of the last 40 years has been wrong. She said standard economics, and my entire career, I would have said, if somebody wants to send you cheap goods, you should send them a thank you note. Her quote directly, I would never, ever again send a thank you note. National Security Advisor Jake Sullivan in February was quoted in Politico, a speech he gave to the Brookings Institute in 2023, announcing the end of the last 40 years of U.S. economic and trade policy. And Politico magazine saying in not so many words, laying out a plan to make America great again. Now, this is Biden's national security advisor.
Wow.
So this is in 2.5 months, not even. National Security Advisor, interesting. Secretary of the Treasury, very interesting because her purview is the dollar. So if you, and then, read the statement she made coming out of Beijing 2 weekends ago, talking about a plan that she had arrived with to protect American firms and workers. Stronger dollar isn't going to protect American firms and workers. Not a chance. How does that
They
help?
can't export.
Exactly. So
do you think her that Xi's visit to San Francisco a few months ago was about this as
yes.
well, and it didn't really work out? The dollar just, kept grinding higher, so it took another trip for her to reassure the
It's a
Chinese.
complicated, yeah, it's complicated. I think the San Francisco meeting was to lay out the bones of a San Francisco Accord. And we wrote that for our clients at the time. Basically, a new currency deal to weaken the dollar against the yuan specifically. Mechanically, there are a number of things. All else equal, in a vacuum, the dollar should go to infinity based on the debt outstanding, the euro dollar market, which is basically unreserved and all dollar debt. Left to its own devices, the dollar basically goes to infinity, and the Dow and the S&P and the Treasury market go to zero.
Yeah.
Like that is given the debt levels where we're at. People will just sell stocks, bonds, everything to cover their dollar short as the dollar goes higher. And we started to get into that in the third quarter of last year. We might be right on the verge of that effect happening now. So
that's a threat from Japan, isn't it? For all the treasuries they sit on.
Yeah.
To support the yen. Weak yen has those implications as well, right?
Yeah, that's right. So there's market forces that are very powerful. They can ultimately be countervailed. But the problem is they're so powerful, they're not going to be countervailed by hints and nudges, etc. I think ultimately what we're going to see is the dollar continue to be somewhat firm, managed, the Japanese trying to survive, the Southeast Asians trying to survive, everyone kind of trying to manage this dollar strength. And I think gold's going to keep going up. And I think at some level, I don't know if it's $2,600, $2,800, $3,000, all of a sudden the dollar is going to start to weaken.
Yeah.
And people are going to say, why is that happening? That's nothing. And they're going to go back to buying the dollar. And gold's going to go to 3,100, 3,200, and the dollar is going to keep weakening. And people aren't going to understand that. And then so it's going to take this big, to get the dollar weaker, it's going to have to take convincing the markets that we are in a new monetary regime.
Yeah.
And that full
takes
stop.
time.
Yeah, gold. The United States has now blessed that gold is taking over from treasury bonds as the global reserve asset, primary global reserve
safe
asset.
haven.
The new safe haven, exactly. And we're seeing that in markets right now. People don't believe it. And to be clear, in the short run, you're going to see gold up. You're going to see treasury yields up sharply. And that's going to drive the dollar up sharply in the short run. And that's kind of how it'll go until the yields and treasury market break something like they did. We've been seeing this. And yes, China's been under pressure. But the fact is that the U.S. banking system and or treasury market has broken 5 times since 2019. And China really hasn't broken once. They've strained. They've kind of had to do some things. But it's... if you would have said, hey, rates are going to do what they do, dollar's going to do what it's going to do, rates are going to do what they're going to do, who breaks first, U.S. banks and treasury market or China? And 99 out of 100 people would have told you in January 2022 it'll be China, and it hasn't been. So it's going to be, at that point, once we get the next episode of treasury market dysfunction driven by the strong dollar, higher rates, then you're going to have to move back towards some sort of QE or dollar liquidity injection to prevent a catastrophe. And that's going to happen with CPI at 4. And the dollar's going to weaken. And then we might have to go through that iteration again, maybe another couple times. But at some point in that iteration, in that process of the shift to gold as primary reserve asset being blessed by the US, which I think is what's happening, people are going to get the message, which is, oh my gosh, they want a lower dollar. They're going to manage the treasury market. There is no higher for longer. The only thing that's higher for longer is inflation.
Okay.
And they're not going to raise rates into that. And I can't own the dollar. How can I own the dollar in that? And the answer is you can't. But until we hit that point, I think we're going to kind of be in this regime we're in.
A lot of people are using the yuan for carry trades now. Any comment on that?
It's a bad idea, I think.
Do you? Okay.
I do. I think the yuan's going to rise against the dollar.
Okay.
But I think I think the pivot's going to be through gold. I think Yellen's probably sitting down with the Chinese and going, you need to strengthen the yuan. And then you can read chapter and verse, just Google what the Chinese have said over the last 10 years about the Plaza Accord and what it did to the Japanese. And in my opinion, there is zero chance that the Chinese are going to sit down with the Americans and revalue yuan higher against the dollar like the Japanese did. I think the conversation is, that's nice. Yes, we agree you need a weaker dollar. You want a weaker dollar, you let gold go. Stop sitting on gold.
Okay, interesting. So you bring up rates, and this was the big rally that we had last October. I guess, it's a weekly chart, so it doesn't
yeah, and
look
that was Yellen,
bad.
by the way, right? That was where Yellen, right? The very bottom of that chart was
They
Yellen
changed the
surprising everybody.
packages.
Exactly. They moved to the front end. Exactly.
Yeah. And, at first, Luke, I was thinking, we're just correcting this advance and we're going to get another one. But hearing you talk, I would more look for maybe we're going to challenge highs and yields.
Oh, I think we
here.
will. I think we will. And absolutely.
Because there are a lot of people trying to buy bonds looking for this right now.
Oh,
You don't think that's going to happen?
That's a terrible idea, in my
All
opinion.
right. You know what? I like the way you don't hedge yourself and say, well,
I'm in the money. I wrote the clients 2.5 weeks ago. I said, it's time to buy puts on TLT again. It's time to buy puts on the long bond again. It's time to buy puts on the NASDAQ. If you're a short-term trader, based on, look, the dollar where it is, 10-year yields breaking above 4.3%, and oil going over roughly 82. And that's the kiss of death. We're going to go right back to the August, September regime until they weaken the dollar.
Okay.
And they'll weaken the dollar because they're not going to let the treasury market break. Remember, the treasury market crashed in the third quarter. TLT was down 20% in a single quarter in 3Q23. I don't care what market you're talking about. 20% in a quarter is a crash. The treasury market, like the most important market in the world, that's what's going to happen again. And that is, I mean, look at the MOVE index. Have you seen the MOVE index in the last 3 days?
No, it's exploding.
Oh my God.
Right?
It's exploding, and it is almost to levels where they come in with
October.
That. Yeah.
Okay. All right. So Luke is neutral to bear. I'm kidding. Very, very bearish bonds. Strongly.
Strongly bearish. And now, to be clear, I think as it gets near 5 is probably where they come in and say no mas, and we have this critical moment coming up. What's today? The 17th? 2 weeks from yesterday or 2 weeks from today with the quarterly refunding.
Yeah.
One way or another, they're going to show their hands. They're either going to continue to extend the long end, sort of do nothing, right? So if they like the thing that nobody's talking about with this 10-year sell-off, with this long bond sell-off, is we're barely issuing any long bonds as a share. The long end is ripping higher, and we're barely issuing any.
No new supply there. Yeah,
barely. So, if they come in and issue a bunch more, or say they're going to issue a bunch more in 2 weeks in this quarterly refunding, Katie bar the door, number one. So that'll be terrible for bonds, terrible for risk, great for the dollar. I think the thing that will confuse everyone is gold will rip on that as well, because
gold's been ripping with a strong dollar and higher yields, especially the last
and that's
month.
emerging. Yeah, that's just emerging market currency crisis actions. Gold's telling you the U.S. government is in the early days of a currency and debt crisis. That's all gold's saying, in my opinion.
Okay.
In addition to becoming an oil currency, but the second option they'll have is saying, you know what, we're going to move more to the short end again. And that will be a huge tell. That will be, we have a debt problem.
Yeah.
Sell dollar. Yields will probably rally on that, like they did when Yellen did it at the end of October last year. Markets will moon. Bitcoin will moon. Gold will moon. Commodities will moon. And the third option, which we saw a little bit of a, it's almost like the river card. It's not the river card yet, but we've seen, the flop from tax receipts 2 days ago. They were pretty good. I thought they were going to be pretty good because stocks were up a bunch. So
yeah, right. Capital gains. Yeah.
There's a the third option is she comes out and says, hey, receipts were decent. Issuance is going to be down a bit versus where we thought next quarter and the quarter after. And that's actually probably the best outcome. And that's probably neutral dollar, neutral to slightly bearish dollar. It's probably slightly bullish bonds. In other words, yields probably come down a bit. And stocks probably do well. Gold does well. Bitcoin does well in that. But the important thing is
financial conditions.
Because your financial conditions loosen. Exactly. So the U.S. government's going to stop crowding out global dollar markets for a quarter or two on a sequential basis. So, excuse me. The nice thing as a trader is you don't always get these sort of dates, right? Like it's a pre-scheduled event given where we are. This is a pre-scheduled event. Effectively, this quarterly refunding, in my opinion.
Okay. The dollar already is very loved up here, Luke. You have 90% bulls in the dollar, gold, and silver. Okay. Those three things. I'm thinking that it's possible that dollar could be topping in here and not take out these highs. Do you think could that happen even if yields went to what you were talking about, like a new high yield in the long end? Could the dollar still be topping here?
I don't think so with the yields topping. I think the yields doing what they're doing will force the topping in the dollar. I think it's super important that when you look at that chart of the dollar, it took DXY at 112, 114 to force Treasury dysfunction. Right. Then we fast forward a year, and it took Dixie 107 to create roughly the same level of Treasury dysfunction. Here we are, Dixie 105, 106, 105 last week when we had the terrible auction and that terrible bond action relative to stocks and gold and Bitcoin and everything. Dixie 105 is causing,
so it's less dollar pressure is causing the same negative effect
on the Treasury market.
That's on the Treasury.
Exactly. Right. And nothing's allowed to hurt the Treasury market. So when it comes to choosing the dollar or the Treasury market, they always choose weaken the dollar. And so the Treasury market, I think, is the catalyst for, that whether that's going to break out above it or not. And we're close. You're at 4.67 on the 10-year. You get another couple bad days, you're almost to 5, and Katie bar the door. The dollar will go up in there, but if it breaks out, it's not going to 114. Not unless they're willing to stand aside.
Okay. There are some people talking between 108 and 110.
I suppose that
would be like this, in equality. You had this from here would take it up there. 108, 110.
Yeah, I mean, I suppose anything is possible. What I can tell you is if it does, the S&P is probably going to be down 5 percentage points from where it trades today, at least. 10-year will probably be near 5. NASDAQ will probably be down 7 points, percentage points, down 7%. I think gold will be up. I think Bitcoin will be down. So yeah, I don't have a strong, I mean, my strong feeling is treasury yields will dictate the dollar, not the other way around. And that if it does break out above the 23 highs, it's terrible for everything but the dollar and gold. Those are my convictions. I don't think it will break above that, but that's not a strong view.
Why don't we wrap it with you explaining Triffin's dilemma to the viewers?
Triffin's dilemma was something laid out by economist Robert Triffin. I want to say it was in the 60s, but the gist of it is that if you use your national debt, your national sovereign debt, as the settlement asset, your currency as settlement asset, initially you get an economic boom, but ultimately your debt hits levels that call into question your solvency as a nation, and trade and the monetary system begin to break down. And that's where we are, absolutely, where you can see everybody's questioning our debt. We can see in the markets that what we were just talking about with dollar rates, move index, treasury dysfunction. All of that is a symptom that the United States debt level has reached a point we cannot afford it without negative real rates. And if you're a creditor of the US, you have to be an idiot to hold debt who's yielding below inflation. That's how you go broke as a nation. That's your reserves are bleeding out. Especially when oil's doing what it's doing, right? If you're an oil importing creditor of the US, your treasury bonds are falling against inflation, and they're really falling against oil. And so you've got to switch to something else. And I think that's partly what's driving gold, is just this secular monster bid for gold that has been from central banks for 10 years. It's really turbocharged in the last 2. But Triffin's dilemma, we're living what Triffin laid out would eventually happen. Reagan proved deficits don't matter except in the long term. Well, like, Reagan was president 40 years ago. It's here. Long term is 40 years. Here we are.
Luke, really great conversation. I mean, especially timely with what's happening and the juncture we're at in the market. You and I have been talking for years, Luke. I always learn from you, and I really want to thank you for sharing your hard work for free when you come to F.A.C.E to edify our community. And you should at least sign up for Luke's, free, and check out what he does from the forest to the trees. And go to FFTT-LLC.com, and you could follow Luke on X at his name, at Luke Groman. And if you're not following Luke, you're missing a watchman in probably the most historic time in financial history of our country. So stay informed, and let Luke show you the forest from the trees. Thank you, Luke.
Thank you for having me, Dale. I always enjoyed talking with you, and I always learn a lot as well. So I appreciate it.
Great conversation with my buddy, Luke Groman. Check him out, everyone. He's part of my intelligence gathering. So very important what he brings up here. We're talking about, like, the first thing you have to learn to do in trading is, how do you survive? Well, in this era that we're in, living through Triffin's dilemma, you also have to plan and prepare. And that's what Luke does for his people. So thank you, Luke. Great talking to you.
Thank you for having me on, Dale. Likewise.
Right.
Have a great rest of your week, bud.
All right. My friend Luke Groman, everyone. And you could catch the team in 15 minutes on the Morning Edge. Hope that you enjoyed, Luke, and that you got some decent ideas from us today. Good hunting, and most of all, don't just count your pips, count your blessings. Adios, my trading warrior brothers and sisters. You're welcome, Laura, Ingmar. Luke is great, isn't he? All right. I'll see you guys tomorrow. Adios.